Hey everyone, The Trade Desk is a digital advertising company that helps businesses purchase digital advertising on connected TV platforms like Netflix and Roku and others. But that's not the only area it helps purchase digital advertising. Connected TV is just its most prominent segment. So in this video, I'm going to review the latest developments at The Trade Desk, and I'm also going to update my buy recommendation for Trade Desk stock. I'll let you know if I think the stock is a buy, hold, or a sell. But let's begin with the latest developments.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its most latest quarter, the company's revenue grew by 28% compared with the same quarter the prior year. Now, this was significantly outpacing the digital advertising industry, and the Trade Desk has done this for several years now. The advertising industry grew by about 8% in the most recent quarter, so the Trade Desk is growing at about 3 times the rate of the ad industry. That growth rate is coming on the back of trends that are working in its favor. More marketers are moving their advertising from linear or traditional or legacy methods over to digital methods, right? They're switching from print newspapers, I should say, billboards and linear television, and they're moving their ad spending over to social media channels, digital advertising channels like the ad-supported version at Netflix, etc. Budgets are shifting in that direction, and that favors the Trade Desk. So even with its considerable size, connected TV continues to be their fastest growing channel. Over the past few months, giants like Disney, NBC Universal, Walmart, Amazon, and now Roku and LG have all made deeper pivots into connected TV. And you've noticed that with Netflix as well. They did not mention Netflix here, but for more than a decade, Netflix resisted having an ad-supported version of its streaming service. Now Netflix offers the ad-supported version. Amazon similarly did not have the ad-supported version of Prime Video. Now they shifted everybody by default to the ad-supported version. So these are hundreds of millions of viewers that are now exposed to advertising through connected TV. That's more inventory, and that's helping the Trade Desk purchase more inventory for its clients. So it's all been working for the Trade Desk favor over the last couple of years. And already the advertising market is absolutely massive. It's roughly $1 trillion every year worldwide that gets spent advertising. And so it's a massive market. It continues to grow, and it's one of those industries that I feel will never go away. We seemingly cannot get away from advertising regardless of how hard humans try. I don't think we will ever get away from advertising because our economies worldwide have become so dependent on advertising. So much consumption worldwide happens because of advertising. If there wasn't advertising, the amount of consumption would decrease so substantially that economies worldwide might collapse. That's how much spending is happening just because of advertising, right? You see a commercial for a new car and it makes you want to buy that new car. Do you need that new car? No, your 4-year-old car will probably be fine for the next 7, 8 years even. But people go out and replace their cars every 3 to 5 years because they see advertisements or they see a new model and it gets them excited. It makes them want to buy. Imagine without advertising. Would you want to buy that latest model? Probably not. So that's just one example of many other examples where people's consumption patterns are influenced and encouraged through advertising, and without it, businesses would struggle. So that's why I don't think advertising will ever go away. In fact, I think this will just be an ever increasing industry over the rest of humanity. All right, so one of the other trends that the Trade Desk has been working for is trying to create an open internet and get advertisers away from these walled gardens. And what they mean by walled gardens are Meta platforms and Google, because Meta platforms and Google have such dominant market share in the advertising industry that they command so much pricing power, they command so much market power, and that makes it unfavorable for buyers. It makes it unfavorable for buyers because the sellers, Google and Meta, have so much power. Whenever that side of the equation has more power, the other side of the equation suffers. The buyers, they suffer because they don't have the negotiating power against Google and Meta platforms. By the way, that's one of the reasons why I've rated Meta platforms and Alphabet as one of my top stocks to buy in 2024. In fact, Alphabet is rated as my top stock to buy in 2024. I've had it rated up here all year long, and that's partly the reason why. It commands so much power in the market, that companies are trying to come together to try and diffuse that power. And it may work, it may not work. It's going to be hard for anyone to encroach upon those massive influences. Over 2 billion monthly active users on YouTube and over 3 billion daily active users on Meta platforms. It's going to be hard to penetrate that market. So in 2022, it marked the first year in a decade that the majority of digital ad spending took place outside of Meta and Google, right? These two companies were commanding more than the majority of ad spending worldwide. Just two companies were commanding nearly more than half of all of the ad spending worldwide. Just two companies. Imagine that, right? So with the proliferation of connected TV and retail media, that trend accelerated last year, and I believe the trend will only continue moving forward. And I agree with that, with now Netflix offering its ad-supported version, and they reported that they have nearly 40 million subscribers in the ad-supported version. So that's 40 million people, 40 million active users that spend hours per day on Netflix. And then Amazon as well with its Prime Video offering advertising, and then Amazon throughout the e-commerce platform offering advertising inventory. Amazon has continued to gain significant market share in the advertising industry, and Walmart as well. Walmart making inventory on its website available. And so with the rise of all of this inventory, that's growing to take market share away from Meta platforms and Alphabet. Still, those two are the most dominant players, but others are rising and taking market share. And that's beneficial to the ad buyers. It's beneficial to the ad buyers. So the trade desk is trading at a forward price to earnings ratio of 52. It's demonstrated excellent revenue growth, as I highlighted earlier, 3 times the market rate of growth, operating in an industry that's absolutely massive, $1 trillion industry. And it's also been able to boost its operating profit margins in recent years. Although one of the reasons I've been troubled and I have not had trade desk rated as a buy is because I don't see a clear upward trend. I see volatility here with its operating profit margin. I see ups and downs, and now it's going back up. But over the longer term, it's been on a downtrend here. The operating profit margin in the last 5 years is lower today than it was 5 years ago. And so I don't see a clear upward trend line here, which I like to see if I'm paying a forward price to earnings of 52. That's on the expensive side of valuations. And so I like to see excellent metrics. And so since I haven't seen that, I haven't had trade desk stock rated as a buy. I've had it rated as a hold. And I last updated this on May 28th. I'll update that again here today and reiterate that I don't think the stock is a buy. I think this stock is a hold at current valuations. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.